receive Mr. Leke Adebusui, who will be speaking to us. So please, let's keep our fingers crossed. It promises to be exciting, and then promises to be rewarding. So we see people are trying to join. Many people are joining presently. So let's wait a bit for them to come in. Thank you. So Mr. Leke, please accept to be a panelist. I'll send you the prompt so that you can join as a panelist. Thank you. Yeah. All right. So yes, we have here already Professor Professor Oluwaranti, Professor Damilola Gbalajobi, and Mr. Leke Adebusui, who will be handling today. So I'll be handing over very quickly to Dr. Gbalajobi. Please, ma, do you think we should start, or do you think we should wait just like 2 minutes more?
We can wait for
Because
2 minutes.
people are. All right. Thank you very much, Mash. So yes, 2 minutes. In 2 minutes' time, we'll kickstart, and that is on 12:05 prompt. So if you have people who are trying to join, it's a good time to tell them to come. And then if you know people who should be part of this conversation, this is also a good time to share the link and the information of the meeting to them. Please, let's work together to make it fresh. Thank you very much. By 12:05, we will start, and then it promises to be exciting. This is one of the topics that is key at this moment, for everybody who earns any kind of living. It is a topic you're interested in. So thank you very much. We'll see you.
Good day, distinguished colleagues, scholars, professionals, and students. It's a pleasure to welcome you to this public webinar hosted by the Central Office of Research of Obafemi Awolowo University. I hope you can all hear me. Mr. Dimeji, I hope I'm online.
Yes, you are online and you are audible, ma'am.
Beautiful. Thank you very much. Tax reform is never just about numbers. It's about power. It's about equity. It's about economic growth. And ultimately, it's about who carries the weight of national development. But before we proceed on this webinar, I'd like to welcome the Deputy Vice Chancellor, Research, Innovation and Development here in Obafemi Awolowo University to give us the opening remark. And it's going to be represented by Director of the Central Office of Research, Professor Oluwaranti. So you're welcome, sir.
Yeah. Thank you very much. Actually the Director of Linkages and Partnership Office. So I'm standing here representing the Deputy Vice Chancellor, Research, Development and Innovation, who wants to that he wants to send greeting from the Vice Chancellor, Professor Adebayo Simeon Bamire. We want to appreciate everyone for coming for this webinar. The essence of this program is to engage the public, not necessarily the academic environment, but the public on issues that are of contemporary value to every one of us, whether we are in academics or not, whether we work in the community or we are outside the community. What we are engaging in is to support one of the pillars of our being in academics, that is community service. Let us come together and discuss, engage on things that affect us, not necessarily bringing out research result every day. There are so many other fora that are doing that. But yeah, what we want to do is engage the public, engage ourselves on issues that are prevalent, that are common, that one way or the other affect us. And we want to start this by looking at what everyone of us woke up to in 2026. And that is the tax reform. We've been hearing about issues that come out. If you follow the news, you know, before the promulgation of the law has come into effect. It is here with us. And there have been a lot of misinformation, issues that are not really what we can't be sure about. We are not even sure.
Sorry, we had a little hitch with the internet connection. Welcome back, Sir Amas. You are muted, Prof.
Okay. So without much ado, we want to introduce one of our our main speaker for today, who is an expert in the tax and banking issues, and he would like to speak as its person, not necessarily representing any organization, based on his own expertise, and he's somebody that can speak directly to the issue, that how tax affects you, how it engages, how we can engage with the situation. Basically, I do not want to preempt anything that is going to be saying, but one thing I know is that we are going to learn, we are going to have an idea of how the tax reform will affect us, and we can be better prepared for it. Whether it is positive, whether it is negative, whether we like it or not, it's not issue that we can answer to right now. But we want to just welcome you on behalf, I just want to welcome you on behalf of the Deputy Vice Chancellor, Research, Innovation and Development. And I hope that the next 1 hour will be a stimulating period that you will enjoy, that you will learn, and at the end of the day, our community will be better for it. Thank you very much.
Thank you very much, sir. Thank you for setting the stage for this intellectual conversation. Of course, you all know that in a country like Nigeria, where physical sustainability, public trust, and economic competitiveness are under constant debate, tax reforms is not optional, it is inevitable. But the real issue here is how it is designed and who protects it. And so to help us unpack these complexities, we are privileged to have Mr. Leke Adebusuyi. He's a seasoned banker and a public policy analyst whose experience sits at the intersection of finance, regulation, and economic governance. So this morning is going to guide us through what 2026 may realistically look like, not just in theory, but in policy impact. So please join me as we welcome Mr. Leke Adebusuyi to help us unravel what this tax reform is all about, not merely about revenue, how it is going to be about fairness, growth, and national direction. Please join me as we welcome Mr. Leke Adebusuyi, who is going to be the next voice you're going to be hearing. Thank you very much as you listen.
Thank you very much, Prof. I appreciate the opportunity to be here today. Thank you to the Vice Chancellor, Professor Adebayo Simeon Bamire, the Deputy Vice Chancellor, Research in Innovation and Technology. Thank you to the Professor Nero Luarati, the Director, Linkages and Partnership Office. Thank you, Prof, for the invitation, and thank you for setting the stage for this conversation. My slide is going to come up in a moment. I would like to confirm that you can see it. Okay, I'm sharing my screen. I think I don't have the access rights to do that yet, so please, the technical team may need to help me. The subject matter for discussion today is on tax reforms, and as it has been said, it's not going to leave any of us the way it met us.
Sir, I can share your slide now.
Okay, thank you. All right. All right. Please kindly confirm that my screen is up.
Yes, it is. Thank you, sir.
All right. Thank you very much. So the reality is that the tax reform is not going to leave any one of us the way it met us. And I like the fact that the university community is looking at it in the reality of the fact that there are going to be winners. Everyone or most of us are going to pay. At least everyone who belongs to the university community in one way or the other are likely going to pay. And ultimately, there will be those who will complain. So I would like us to dive straight into this. We'll be looking at, I'll make attempts at definitions. We'll look at key changes under the new Tax Act. We'll try to also address the concerns of the ivory tower, which is the reason for this meeting. Then ultimately we'll decide who wins, who pays, who complains. So in a quick attempt at definition, I would like to say, according to Simon Jones is an Australian taxman, and he said tax is a mandatory financial charge or levy that governments charge both individuals and businesses. The intent is that these taxes generate revenue that pays for public services, infrastructure, and various other everyday needs of a functioning society. That we largely know, that will largely align with generally, and even in the context of Nigeria. Another thinker, Nightingale, in 1997, he was of the opinion that taxation is a levy. It is imposed by government on the income and profit of individuals, partnerships, and corporate organizations. Now, this is bringing it home clearly. It is on income, it is on profit. It aligns with what we will be talking about today. And by further definition, this I found on study.com. I was not able to pin it to a specific individual. This definition says tax is a compulsory, non-refundable monetary levy imposed by a government on individuals or entities to finance public expenditure and services. This is the part I like the best in this definition. It said it is backed by law and generally not in direct exchange for a service or for a direct or proportional service. So the general question in Nigeria since the new regulation came on board is about how it will be used. Well, we expect the best. We look forward to the best, but sincerely, taxation, according to this definition, is not going to be in proportion to any service or exchange. It's not a direct exchange, and it is not going to be a refund for anything we have done in the system. So having this in mind, we'll dive deep into the discourse for today. The new Tax Act, what mandated it? The old Tax Act, which came on stream fully in Nigeria as a legal document, came on stream in about 1944 in Nigeria. Particularly, I'll be zeroing in on the pay-as-you-earn part of it, which is popularly called payee and personal incomes. That's what I would focus on for this discourse. In 1944, Nigeria was one of the first countries in the world to adopt it. And it became, over time, it was amended, but at some point it became very obvious that the provisions of the tax laws in the country are not in consonance with modern realities. The world has evolved along, the culture of work, the culture of earning, the system of payments had evolved so much that the law on tax had become moribund and ineffective. So the government of the day decided that it is time to look at it and do a comprehensive review. And for most of us, these are the key areas of the new regulation that will affect us. The major changes to it, number one, it is a more progressive we have a more progressive personal income tax rate. Unlike before, the income tax, personal income tax it comes at almost a defined rate and at a very base value. For instance, on the old tax regime, we have by the time you are earning up to 3.2 million naira, you get to pay at the maximum rate, and that maximum rate applies for practically everybody. So it was a bit too direct on people, and as a result of that, part of what this new regulation has done is to ensure that there is a more progressive rate to the tax. Then, two, the one that has a significant impact on the university community, as it were, and on education, higher education particularly, is the introduction of the development levy. And the development levy is going to replace what we used to know as the TET fund. There are other forms of levies that the government charged. We used to have TET fund, information and technology levy. We used to have NASENI levies, police trust fund. All of these are going to be bucketed together in the new development levy. The rates too has been amended for corporate. These affect corporate organizations, but because the university community is a beneficiary of a substantial part of what is being merged into this, that's why we are mentioning it as part of what affects us. Then the new law envisages that there will be disputes, but it also understands that the reason why people avoid taxes in the first place could be because the process of resolving it, any discrepancy or disputes, it's very lengthy and difficult, sometimes almost impossible. So the new law factors in the fact that citizens will have reason to debate what they are paying as taxes. They will have reasons to challenge what the government is putting on them. And so they feel, okay, if arbitration for tax disputes has to go through the courts every time, number one, it will take so long. And at the end of the day, the aim will be defeated because you could spend several years in court on appeals. And at the end of the day, both the government and the payers of the tax will lose in the long run, because there's what we call time value of money. So this new law looks at the fact that it is important that while discussing taxes, we should also find a way of resolving disputes very quickly. So there's what we call an ombuds office that has been built into this new tax act. And it says, when you have a dispute with the tax authority or with what you're taxed, you can quickly go to the ombudsman. There is a process and there is a timeline that ensures that the resolution is done very quickly and that both parties can easily, there can be easy arbitrage of tax disputes, unlike lengthy court sessions that we used to have on the current in the current dispensation. Then we have what we call the VAT, the value-added tax. Prior to now, value-added tax is on practically everything. You buy food, you get the value-added tax. You buy healthcare materials, VAT is slammed on it. You buy medications, you pay VAT, and practically every service. But there are certain essentials that are crucial to life and living. So the government said, no, we won't take value-added tax on every and anything. Let's streamline it. There are things that are basic and and core to life. Basic food items, medical and pharmaceutical products, educational books and materials, medical equipment and services, tuition and other things. These things, the government said, okay, we will not just bundle everything together and slam VAT on it because it is a service or it is processed. No, let's exempt something. So basic food is now exempt, educational materials are now exempt, tuition fees are now exempt. So this would also, this is one other line item of this regulation or this review that is going to benefit significantly the university community. Then it has also factored in the fact that people are more mobile now. And because people are mobile, they are likely to, and the culture of work has evolved. And because the culture of work has evolved, we have people who live in Nigeria, but their work is rendered in other jurisdictions, other countries, and they earn money. And in those jurisdictions, because they are also not present there physically, they are not taxed. So leverage the services and the infrastructure we have in Nigeria to make money and not to pay something. The law recognizes the fact that when you are resident in Nigeria and you make money from other jurisdictions, you need to pay. And so the law factored that in. The law also recognizes one other thing, that up until now, there are some Nigerians who earn money in Nigeria, but they may not be resident in Nigeria for that period. And because of that, they are also depending on services from other places. And so the law is allowing them the option of the benefit of the doubt. So there are provisions about how a resident is defined in the new law. And ultimately, there is also the increased exemption threshold for compensation for loss of employment. This affects all of us who work in paid employment. Before now, if your employers lay you off and there is a compensation, once you are paid 10 million naira, every extra pay on it will be taxed. But now the government is saying you are losing a job or you are moving away not particularly prepared for. So you are under some form of strain. So the government is saying, okay, we have looked at our economy and we realized that we need to give people a bit more lax room with respect to how we go in on them on taxes when they have lost employment. So the government is now saying we are not going to apply any taxes from anything that is paid to you upon as a result of your loss of employment from 0 to 49,999 naira. I prefer to take the lower threshold and be safe. But they are saying, although the law says 50 million naira, but the law now is saying every penny after 50 million naira that your employer who is severring the work relationship with you pays you, they're going to there's going to be a tax element on it. So this is an improvement to what used to be, and these are the key changes to the new tax act. So the progressive payee regime, old rates from what we can see now, we have the old rates. Prior to now, anyone who makes up to 300,000 naira annually would pay at 7%. The new law is saying no. The poor needs to breathe in our system. So the new law says for payee, if you are earning 800,000 naira and below, we will not tax you. We need to let you have room to breathe and grow. So under the new rates, nobody is going to get taxed if they make less than 800,000 naira in a year. Then the old rate says 11% is the new, once you make up to 6, everything above the first 300,000 naira will be charged at 11%. The new law says will allow you to make up to 3 million naira. Next phase of it is in the old law, 15% kicks in once you're making up to 1.1 million naira per annum. But in this million naira per annum, we only tax you at 18%. Earning per annum in the old law, you are taxed at 19%, but now you have headroom up to 10. And that 21% used to apply on 3.2 million naira, all of the earnings from 300,000 to 1.6 million naira. 3.2 million naira per annum before now pays taxes at 21%, earning at least 13 million naira per annum. 6.4 million naira per annum, your tax kicks in at 24%. But now the new regulation says no. Even the middle class, they need room to grow. So you must be earning up to 25 million naira per annum for us to tax you at 23%. And if you are earning 50 million naira and above, you qualify as not just middle class, you qualify as wealthy, you qualify as rich, and the rich amongst us should be willing to bear some of our burden. So tax kicks in at 50 million naira for 25%. So I think this new rate under the new regime of the 2025 Tax Act, it's clearer, it's more accommodating for everyone who earns income. So the ivory tower have specific concerns, universities, specific concerns, and we'll dive right into it to find answers to some of the concerns that are specific to the university community and academics on the new tax act. So number one, the first question that comes to fore is, what is the real goal of this reform? What is the government trying to achieve? Are they trying to be fair, or they just want more money? And my answer is, of course, government wants more money. I want more money. So it is right for government to want more money. So the new tax act says government is most likely going to make a lot of more money. There's going to be more income for states and local governments. There will be more part of the regulation or the law as it is amended. The federal government takes a certain chunk, state government take, local government take. Now the government understands that because these monies, a significant part of it are going to come from the federating units, they have devolved some of the sharing to them in a more equitable way. So yes, government is going to get more money, but there's still fairness in what the deal that is on the table is, because now we have progressive personal income tax that is fair. It's fairer than what used to be. So there is progressive personal income tax. There is tax exemption for low-income earners. We have never had it before in the country. Now we have it. There is tax exemption for low-income earners up to 800,000 naira. And if you look at it, 800,000 naira about sums up the minimum wage. So it is fair consideration from the government, and it is a measure of fairness. Then 20% of the rent exemption is where they live. If you are renting where you live, the government is saying will give you 20% of your rent up to it. Once it is up to 500,000 naira, we will not accommodate it any further. So there is a cap to that, but it is also a provision. This used to exist in the old law, but in this new regulation, in this new amended provisions, it is the room is better, and the value, the amount that one can be tax exempt on is fairer. So there are also tax exemptions for SME, small and medium enterprises, in this new law. So the truth is that yes, there will be more revenue, but at the same time, there is also fairness built into it. Both truths can stick together and not bite each other. Then we are looking at who truly wins. Do we have, is there a win in this for low-income workers, the middle class, the government? Who is winning in this? Who is winning in this? So we look at it. If you're earning below 800,000 naira, you're tax exempt. That to be earning below 800,000 naira means you are barely making 70,000 naira per month. And if that is the case, you are classed as low income. And for the current reality of our country, that means the person is actually poor. Even for those who live in rural areas, 70,000 naira, it's per month is very low income. But the truth is that the government is saying we are giving you tax exemption if that is what you are earning. So it's also saying in this new act, in this new regulation, it's saying small businesses that are mostly owned and run by families. You go to the market, you find that the wife manages the shop they have there or the stall they have in front of their house. The husband goes to the farm. At the end of the harvest season, he brings in his produce and the wife sells. All these small businesses that were previously taxed heavily. The government is saying, no, we need you to grow so that your businesses can be better. So the government is saying all these small businesses that are run by families, by low-income earners, we can let you breathe. So finally, the poor can indeed breathe under the new law. Then for the middle class, where most people on this call belong, for the middle class, the new Tax Act has certain provisions that take care of the middle class. Number one, the progressive tax rate is an advantage for the middle class. Then, importantly, it is saying between those tax bands, you have a lot of room to wiggle as your income progresses without getting heavier taxes. But it's also saying, just in case you feel, okay, I'm being taxed too much. And that is what the middle class can do, because to the middle class, you bring knowledge, you bring expertise, you bring the capacity for intellectual thinking. So there might be reasons to challenge the system. And the government is saying, we know that if you have to challenge the system and you have to go to court, we know that that might make you chicken out. But we're saying, no, let's create an ombudsman with this act. So you can simply stroll to the office, to the tax office in your locality and say, look, I want to challenge what I've been taxed. And you have the opportunity of an arbitrage that will not cost you. It is part of the system that has been built into this. Then you can also make claims on interest that you pay on mortgages for owner-occupied homes. Middle class, we are all about owning homes, the environment we live in. We want it to be of certain standards, and we know that we have access to credit. And when you take these mortgages, as you are paying back the mortgage, there are interest elements that are attached to it. And the government is saying, we know that when you took that money, you used it to buy a house. And as you are repaying, we also understand the fact that your repayments are lump sum. And as you are making the repayments, yes, the mortgage is coming down, but there are interest elements to it. And the interest element is not an expense on you. You did not spend the money. It is part of what we have taxed you that you are using to pay these interest elements to, apart from the repayment, the lump sum repayment. So the government is saying, you know what? Every interest element on your mortgage loan, where the home is owner occupied, we will leave it for you. You won't pay taxes on it. Where on the interest element of your mortgage, this is another benefit that the new regulation has considered for middle class earners. Then, for middle class people, we also know that we are about improvements, we are about wealth creation, growth, and we invest in different things. We invest in mutual funds, we invest in treasury bills, we invest in fixed deposits, we invest in shares, and all these things. We invest in government bonds. And government is saying, if you invest in our bond, we're not going to tax you on the interest you earn on government bonds. So government bonds are tax exempt. And there are also provisions in this new act where if you happen to buy shares and you are selling, if the sale is not up to a certain threshold, some around 10 million, some around 50 million, you are allowed to take all the money without paying tax on your capital gains for shares. So these are provisions that allow the middle class to indeed grow wealth and get better. Then for the government, they are always the culprits. They have a wider tax net that guarantees that they will have more revenue. Then the new law allows for more visibility of funds movement within the system for tax enforcement purposes, and also to curb corruption and manage security. So these are some of the realities of this new act. So there's a reason for everyone to smile in the new tax act. Then academics are basically concerned about the opportunities to make money from multiple streams, allowances, bonuses, benefits, and we want to be sure what will happen with these allowances. Now, a significant consideration is the consolidated academic tools allowance that was negotiated with the government last year, and part of the agreement is that earning will be explicitly tax exempt. So under both the Personal Income Tax Act and the new Nigeria Tax Act for 2025, so whatever you earn under the consolidated academic tools allowance will not be taxed. That is a point to note. Then again, it is important to also say that general bonuses and other allowances, they remain taxable, while consolidated academic tools allowances will not be taxed because that was built into the agreement. Any additional bonuses, allowances, perks that are deemed general and not specific to the consolidated academic tools allowance negotiation will remain subject to progressive pay-as-you-earn income rates. This we need to note. Then, side incomes. As academics, we have opportunity to consult. We sometimes get invitations to speak, and we get honorarium, as well, external examining, we get paid some allowances. What is changing? This is how I will look at it. Number one, if you are consulting, most of the time, I work with an organization that hires consultants from the academia, from OMEs, OEMs, office equipment manufacturers, and different service providers. And when we put up contracts, there are parts of it that are taxes. We have the withholding tax, and we bill it into what we are paying the consultant or the service provider. So when that is taken in, it is taken not in the name of the organization, it is taken in the name of the beneficiary. So let's assume that Professor ABC is rendering a consulting service to firm XYZ. When Prof is negotiating that contract, Prof should confirm from the company, are you billing me? Are you remitting my withholding tax on this? And if they say yes, we are remitting the tax on this, then ensure that it is written in your name. Look at the terms of the contract very well. The same thing for honorarium. Same thing when you go for external examinations. We need to pay attention to details now more than ever before. Then we need to check if there are no deductions from source. You have a duty to declare that earning and pay in line with the appropriate pay-as-you-earn rates. So if the organization that has hired your services say, no, we are not going to render it, we are not going to remit it, then the duty is on you to ensure that you look at it, you factor it in, and declare it and pay at the prevailing pay-as-you-earn rates, at the appropriate pay-as-you-earn rates. Then, when you have consulting contracts, ensure that you discuss the tax remittances. Some of them will say, yes, we're going to take withholding tax, but they are not going to remit it in your name. So you need to factor that in. You need to negotiate it with them and let it be clear that, yes, this has been paid at source and it has been remitted in my name to my credit. So now, over the years, the government has worked on identity management. We have the NIN, we have the bank verification number. Now everybody have tax identification numbers. We have always had tax identification numbers at the State Board of Internal Revenue levels, but it is something that we mostly do not know about, except, of course, if you are a resident in a state like Lagos, that has been a major driver of tax remittances for several decades now. You might not be aware of the fact that you have always had a personal tax identification number, but now is the time to factor it in. At least part of the requirement is that you should, when you are negotiating contracts and it becomes necessary, if you are not giving them your tax identification number, I will even advise it is best to give your tax identification number if they are going to remit it at source. So importantly, we should not assume that it will not be noticed, that special earning from consulting, from honorarium, from external examinations will not be noticed. It is appropriate to declare and declare it appropriately. So sabbaticals, foreign earnings. We need to talk about tax residency. Now, the new act considers that under the personal income tax applies to the worldwide income of Nigerians, of those who are resident in Nigeria. Before now, we don't care. The government was not really bothered about the monies you make from other jurisdictions, from other countries, from other geographies. They're only concerned about the money you make within Nigeria. But now the new law is saying, no, we know a lot of Nigerians, you invest abroad. And when you invest abroad, you get paid. And when you are paid, you just collect the money quietly and turn your back. And you live large within our system. And you live here, you put pressure on our facilities here without contributing commensurately to our facility development and our infrastructure. So we are saying, no, we want to put an eye on this. Other countries of the world that are deemed bigger and richer have had this kind of law in place for a long time. This provision of the act is similar, not in totality, but it is similar to what we have in the US, that is the Foreign Assets Tax Compliance Act for US nationals. So if you're a US national, wherever you are in the world, whatever sum of money you make, that country is under obligation to declare it to the US. So Nigeria is saying, for Nigerians, we know you make money from different parts of the world. Academics largely, we have exchange programs, we have consultees, we have sabbaticals across different countries, and most of the time we just earn those monies, come quietly into the system. But the new law is saying we want to look at it, and we want you, if you are here, we want you to give us what is due from what you have earned. Then expanded definition of residence. It now includes substantial economic and immediate family ties. In this, the new regulation is saying, we know that some of you are going to stay, most of the time you are going to stay abroad, but you have properties here that you have bought because you have worked here. You have invested here substantially, and those investments are yielding for you. The new law is saying, when you earn money here and your family is here stretching the infrastructure, you need to also still contribute, even though you are personally not in the country. But immediate family ties, economic presence means that you owe us something. You need to also give it to us here. Then you are considered a tax resident in Nigeria if you spend 183 of the 365 days in a year in Nigeria. 183 days, if you split 365 into 2, you will have 183 and 182. So if you are staying 183 days out of the 365 days in Nigeria in any given year of tax assessment, the government is saying, under this new tax act, a majority of your time for that year has been spent in our country, and the ideal is for you to give us your taxes in this country for that year. So that is a provision in Section 202 of the Nigerian Tax Act 2025 under general interpretations. Then you are expected to remit taxes on earnings during sabbaticals abroad if you are not taxed in that country. So if taxes do not apply on your earnings in that country, when you come back, you expect that you remit that tax in the country. Then for local sabbaticals, the ideal scenario, particularly we know that the federal university structure that Obafemi Awolowo University belongs to, the federal university structure is such that when you go on sabbatical in a federal university, the accounting process is the same, and most likely, more often than not, your taxes will have also been deducted at source there. So in those instances, confirm that the tax has been deducted from source. And in any instance where it is not deducted from source in those institutions, ensure that you declare it and you pay your taxes as is appropriate within that band of payee remittance. Quickly moving on, there is also this area that concern academics, grants. Broadly, as an observer from outside the system, we know that grants work in two broad ways. We know that there are those individual grants where probably a laboratory in another country have certain research interests in Nigeria, and you are here as an academic, as a researcher, and they're saying, okay, we need your specific services to get this thing done. And they said, okay, this is what it's going to cost us. This is what we need. and there is an agreement, and the disbursement of the grant comes to you as your person. Now, it is important that you ensure that in your contractual terms with them, some of it might not feel like actual contracts because they are just back and forth mails exchanged, and you just feel these are not real contracts. No, every such arrangement, every such agreement is a clear contract. So ensure that the contractual terms are clearly defined, where you are going to buy reagents, you are going to buy equipment, you are going to mobilize to travel for field survey, you are going to mobilize people for data collection or whatever it is. Ensure that it is clear, and the expense line to ensure that even though the grant comes to you as an individual researcher, ensure that every line expense of it where it pertains directly to the research, ensure that it is clearly spelled out both in the contract and in your detailing, so you do not have to take responsibility for the full value that you are given as though it is an income. So it is important that we note that. Then when you are engaging in the actual research, ensure that you have verifiable records of all expenses that are related to the research project. Ensure that your records are clear and they are verifiable. Then in the lifespan of that research project that you have been given grant as an individual researcher for, ensure that you separate your personal allowances from that project, from project-specific expenses. So assuming you have been given $1,000 as an individual researcher, $1,000 grant as an individual researcher, and the total expense for the project is going to be $800, and $200 is compensation for your work. It means what you have earned from that project is $200, not the whole $1,000. Ensure that you separate your personal expenses from the project expenses. Don't lump it all together. Otherwise, you might become liable for the full sum. That is important to speak about. Then, when the grants come to research centers, research teams, let's assume a team in computer engineering teams up with a team in mathematics, teams up with another team in botany, teams up with another team in political science department, and they want to form a research center to address computerization of climate challenges and how it affects the elections in 2027. Let's assume that is what the research team has come to do, and it is a center. They have agreed that, okay, we are going to work collaboratively, and we'll probably have a project office. We now get a grant from the US government to do it. Now, that is not an individual grant. It is a grant to a team or to the center that is named for that project. So from that hypothetical instance, we now have, when we are dealing with that government agency that is giving us the funding, number one, because it is a government agent, 9 out of 10 times the contract will be clearly defined. So we ensure that in the contract, they clearly state the project deliverables, what the financial mileages are, what the source and purposes of funds that will be dispersed. Let them state it clearly in the contract terms. Then the accounts of the project office should be very clear. Separate project-specific expenses from administrative staff earnings. You know, you're probably going to have to hire staff to work administratively while the project is running. Ensure that these things are separate. Let the project expense be clear in your records. Now, that account to that research team will be looked at like a corporate account. So it is important that you treat them as such and ensure that they are clearly defined. Then they ensure that remittance of taxes where payments to project office and ad hoc staff meet taxable thresholds to avoid liabilities. The minimum tax exempt level in Nigeria now is 800,000 naira per annum. Let's assume that, okay, the project officer you have hired will be paid 200,000 naira per month. Let's factor in other provisions of the act that grants tax exemptions. So let's assume the person is also living in a house where he pays a rent of, let's say, 500,000 naira per annum, and 20% of 500,000 naira per annum comes to 100,000 naira. We had 100,000 naira to what the lump sum is. By the time you break it down like that, whatever tax exemption the project staff, that staff is hired for the project office, whatever you are paying them, once it enters any of the thresholds where they ought to pay taxes, There is also the duty of care of remitting taxes from source for employers. Employers are required under the Act to remit taxes, pay as you earn on their employees. So ensure that for those staff that you hire in your project office whose earnings are within taxable thresholds, ensure that you remit taxes for them and allow them account for it on their behalf so that you do not run foul of the law in spite of the fact that you're providing employment to somebody because you are not aware. Then we need to embrace good accounting practices. Good accounting practices are not particularly difficult. It is just paying attention to details. So where you know that you do not particularly have the skill to do it, you will never be wrong if you hire a professional. Hire a professional to run your accounts and conduct regular self-audits. Now, hiring a professional, you don't necessarily have to have them working as part of your staff. You can hire them to look at your books periodically. You can hire them to ensure that you regulate your expenses. Maybe they are the ones that will be approving your expenses, or maybe you just have a culture of reporting to them, but ensure that the professionals you are going to hire are not the ones that you can easily ensure that they are actually working as professionals, not like they are doing you a favor. Let it be a clear professional contract for them to monitor what you are doing with the grants and ensure that you are within, you act within the provisions of the law in administering the grant. So moving on, we'll look at how do we cope with this new reality. How do we cope? Number one, gone are the days of thinking that you can just earn money and spend and forget it. No, we now all have a duty to pay attention to our income. So all income, ensure you track them. If it is an income, ensure you track it. Salaries, stipends, research awards, honoraria, ensure you track all income sources. Ensure you have your eye on them. Separate taxable pay from truly exempt allowances, like the Consolidated Academic Tools Allowance. Ensure that you don't mix them up. Ensure that you don't second guess that, this money is supposed to be this, where there is the likelihood of a doubt. Treat it as taxable income. Where there is the likelihood of doubt, treat it as taxable income and make provisions for it. That it is better to be safe than have to apologize, because it puts you in the book of tax evaders, and that is not a label that any academic want to carry around. Then it is important that you estimate your tax liability annually. Start it early. As the funds come in on a monthly basis, on a daily basis, on a quarterly basis, half-yearly basis, ensure you are paying attention to it, ensure you are tracking it so that you will not be surprised at the end of the day. Because when your tax is evaluated, it is better you are due for refunds than having to pay back where you did not expect it. Any expense that is not planned for will disrupt your accounting system, will disrupt your books. So it is important that we make early provisions for it. And this advice is relevant now more than ever before. You need a tax consultant. Consult a tax professional who is familiar with the new Tax Act and residency issues, because a lot of academics we are moving and we travel and we have responsibilities offshore. It is important that you engage the services of a tax professional who understands the new act and who will be able to help you to speak to the issues as they go. Then importantly, keep records. Permit me to say it again, keep records. And for the avoidance of doubt, I will say it again, please keep records. Then this is from Kolawole Adebayo. He's a public policy analyst who did some work on the new Tax Act sometimes in 2025. And he's saying, following the law does not require perfection. You just need to be honest and be organized. It requires honesty and organization. trying to put it all together, permit me to tell a tale. I remember that one of the things OAU tells us is that the school is for learning and culture. So permit me to look at this story as we close. So it's the tale of the sage and the boy, the little boy and the sage. The boy, he has a bird in his hand, and he ran towards the old sage and he said, "Old sage, I have a bird in my hands. Is it dead or alive?" And the sage says to the boy, "Son, if I say it is alive, you will crush it and you will kill it. You will laugh at my presumption. If I say it is dead, you will open your hands, you will let it fly away, and you'll make a fool of me still." And so the old sage looked at the boy and said, "Son, the bird, it is in your hands." So in trying to answer the question of who wins, who pays, who complains, the answer will be that it is in our hands. If you are going to win in this new tax act, it is in your hands. If you pay attention to your records, you pay attention to your earnings, you pay attention to income, you will win. If you, everyone is going to pay at some point in time. Everyone is going to pay, except you permanently want to remain a poor person or a low-income person. So, and definitely for whoever is on this call, I think you're already paying, and we will all pay. Who complains? It is in your hands. And with that, I would like to say thank you for having me, and I am open to questions. Thank you, everyone.
Thank you very much, Mr. Adebusiri. We are indeed very grateful for this intellectual clarification you have made about tax. And I'm sure I don't need to do a recap, but basically I'd like to remind everybody that tax is mandatory. And tax is imposed on our income. Tax is compulsory by law. And he has given us everything, capping it up by saying we must keep records. I just was thinking about it, that I'm going to need to tell some people about who are earning and they don't know that they need to pay tax, so that at the end of the year, after so many years, they don't have to pay back. So thank you very much. So just want to give room for questions for everybody to maybe share their views, especially to ask questions. We have some like 30 minutes to do these questions. So we have some questions already from Mr. Caleb Adelowo. And he says, thanks. What about the situation where the payment is coming from overseas? And I think this question has been answered, but I'll ask again. And the tax has been deducted abroad. Do I have to pay tax in Nigeria again? And secondly, he asked 2 questions. Travel grants are common where expenses related to travels are reimbursed after the trip. How is this handled without being treated as income for researchers? Sir, could you answer those questions? Those are the 2 questions we have now. Thank you.
All right, thank you very much. In the course of the presentation, yes, I did. Thank you. Yeah. So in the course of the presentation, I mentioned the fact that certain—
You are muted.
Oh, am I still muted now? Can you hear me, please?
You can go ahead, sir. We can hear you, sir.
All right, thank you. So there are the elements of the new tax act that factored in the fact that, yes, the monies might be coming from a foreign jurisdiction, and when it is coming from a different— when it is coming from a different geography, there are tax rules there, and the tax rules might have been applied to the payments, to the funds that are coming in. So where such taxes have been applied, you will not be taxed again in Nigeria. However, there is a provision in that tax, in the new tax act, that says there are instances where in the jurisdiction where the funds is coming from, you will be taxed at a rate lower than what we apply in Nigeria. For instance, you're expecting in total sum, when the money comes in the foreign currency, you're expecting money in excess of 100 million naira. And where it is coming from, the appropriate tax rate in that jurisdiction is only 10 or 12%. The new tax act says, if that money comes into Nigeria, you are earning at a certain threshold. So when we look at that money, we'll look at how much you are taxed in the jurisdiction where it is coming from. You are taxed 12, 15%. When that money arrives in Nigeria, How much is it? Where did it fall in the threshold? To which tax rate band is that money landing? So when the government said we are going to look at it, if it is less in that jurisdiction, you will make up for the shortfall in our jurisdiction. So you'll be subjected to some form of tax where you have been taxed at a rate less than what applies in Nigeria. But the reality is that in most other jurisdictions where you are highly likely to get funding from, the tax rates that applies there is higher than what apply here. That's not to presume anything, but it's just to provide clarification. Then for reimbursed allowances, ultimately there is what you have spent and there is what you have earned. So when you factor both in, okay, if you are traveling, you are given there is a mileage, and when you earn mileages, the mileage provision is such that we envisage in design of the mileage, the people who design the mileage envisage that if you are driving your car, there's going to be wear and tear on the car. You are going to environments that are not where you are not typically used to, so you are going to go through some form of stress. You are not going to probably stay in your house for that period. So there are certain expenses you are going to incur that are going to be out of the ordinary. So you are going to have some bit of leverage in the expense, in the mileage that you're going to get. So the provisions of that takes care of it. So where there are no significant differences or diversion from what you have been paid and what you have been reimbursed and what you spent, that will push you into a tax band that becomes obvious. Nobody's going to come and start talking tax on the reimbursement. But where the reimbursement pushes you into a tax band that becomes significant, taxes might apply. So be prepared in your mind to look at it and declare if it becomes necessary. Thank you.
Thank you very much, sir. I don't know if you have questions from our participants. If you have questions, please, you can raise up your hand or send the questions in Q&A. I don't know if you have questions, please kindly signify or just let us know so that we can unmute if you want to ask live here.
I have a question.
Okay, in the chat room, I wouldn't
please
know.
go ahead,
I see some questions in the chat room. Okay, all right.
Okay. Hello, can you hear me?
We can hear you, sir.
Okay, thank you very much. Since this is a public domain presentation, thank you very much, Mr. Presenter. That's I was nodding my head when you were saying certain things because it applies consulting, earning honorarium, and all that. So it's how do you? I'm a public servant. I'm a civil servant. Every of my income in the public space is taxed. Just like you said about sabbatical, most schools that we go to, public or state, already they remove the tax. So if I have a consulting work and they are paying, they pay, it's not, where would the tax come from? Is it the totality of it at the end of the year? Okay, I do something for a company and they give me 100,000 naira. Part of the 100,000 naira, I took transport to the location. I stayed in the hotel. The total sum I'm given is 100,000 naira. So where do I factor income in that? Let me give say 1 million naira, but you spend a week in a hotel, they have given you a total sum. So at what point will it now, is it something that I have to keep every month? If I have such opportunity 3 times or 4 times in a year, am I going to now total the expense and income to determine where, what are the, taxable income in that I've just explained? Because just like you said, I took my card there. I spent nights in the guest house. I took care of myself in terms of welfare. Now, the job itself, how do I tax my brain activity to accomplish the task? So If I can, there are certain costs. I'm just trying to explain. There are certain costs I can give. I can give a receipt of the hotel. I can give a cost of fuel. I can give the cost of buying food at some standard restaurant. That I can account for. How do I account for my professional activity that I use to help the organization achieve its goal? Because I can't give a receipt for that, and I'm not paying myself a salary because it's an individual thing. So how do I get a determined income from that kind of a situation? Now, if as an academic, I have academics in the law profession that works with the chamber, and the chamber is giving them more or less like there's what they call it. It's not full salary. It's more or less like compensation for their service. And for some chambers, it is regulated. Monthly, a certain amount of money is paid to their account for retainership for something. How do they account for what is income and what is expense in that? Because if somebody is collecting 400,000 every month from a chamber for being part of that chamber, they might just be using his name. He may not necessarily be doing anything, but they are using his identity as this to enhance the brand of the chamber. So where does income comes in that kind of payment? Thank you. I think I will stop for now.
All right. Thank you very much.
Go ahead, sir.
All right. Thank you very much, Prof. I like the question. It comes guns blazing from all angles. First off, consulting. The devil is always in the detail. So how do we unpack this? Number one, you are consulting for them. They are paying you a certain sum. We know for certainty that the entire sum is not income. There are going to be cost elements in it. So it is now up to you to reasonably define what is cost. And let me give an example. I've been paid ₦1 million to go and do consulting. Okay, hypothetically, OAU is paying me 100 million naira for this presentation. I've spent only 1 hour. And okay, I have spent time to prepare the slide, to do research, and to sit here. And so OAU is leveraging from my 2 decades of work experience that I cannot bill in 1 day. So I can attach reasonable and fair cost to it. So I would say, if I say for all of those years, OAU is paying me 50 million naira, it is unreasonable. 2, I do not have to leave my present space to make this presentation. But I'm imagining that if I have to travel down, if it's a physical session, I have to travel to Ife from where I am, I'll probably have arrived yesterday. I'll sleep over in one of the hotels in town. Then driving my car, okay, the distance between Lagos and Ife is 250 kilometers, give or take a few. Then by the time I factor all that in, my fuel cost, I hire a driver, I do this, I do that. It is not about certainty. It is about honesty. So when you take that sum of money, there is what is called the test of reasonability. What you have billed as income, is it reasonable? So if OAU hypothetically paid me 100 million naira to do this delivery, and by the time I sum up everything, I am saying 90 million naira went into cost. Only 10 million naira is available for tax. The government will look at me and say, you think so you're wise? Pardon the colloquial last line. So there must be reasonability in what is declared as income. So that reasonability is up to you. And at that point, that's where you probably are going to need a professional. The professional will now guide you that where it is subjective, these are clauses that can apply. These are clauses that can apply. These are angles you can plead. And you know, there are certain unique details to each state, to each jurisdiction, even within Nigeria. For instance, when you are coming to Lagos State, there are certain things that apply in Lagos State that you are going to pay for, whether you want to or you don't, because you come into Lagos State. And there are things that, for instance, you come into Lagos, you are going to pay for parking. 9 out of 10 times, if you are going into any public area, you are going to pay for parking. But you can come into Ife get anywhere in the university community, park your car there for as long as you want. The only thing is that those the security people might come to deflate your tires or something, but your car is safe there at no cost. So there are those little associated costs that might come that are reasonable. So it should be factored in whatever you are declaring. For the second instance, where somebody who is listed in a chamber and ends, again, if I am in that position, I will tell the chamber, look at it, take taxes at source. Determine what you think is reasonable, take it at source. That leaves me with more free room. In case at the end of the year, the taxman feels I have more, it is easier to share the blame with the chamber, who is my employer in this instance, than to bear the full responsibility of non-remittance. So I would rather play safe and say, okay, take something at source, subject it to reasonability at your own level, take it at source. Then ultimately, in that instance too, in both instances, I am January 1 to December 31 every year. That is the calendar for taxes in Nigeria, and as is recognized under this new act. So it is up to me to now look at everything that comes as income, the ones that have been taxed, the ones that have not been.
Tadebusi, are you still there? Tadebusi, I think we lost you. Right, just give us some minutes. The speaker is trying to connect. He's trying to reconnect, please. Thank you. Okay. Please, you have other questions, kindly send your questions so that when he comes back, you can answer and then wrap up. Thank you.
talking. Hello, are you back? Hello, Mr. Adebusi. Can you hear us?
He's not back yet.
He's back. I can see him in attendance.
Okay,
Can
I
you
can
pick
see him
up?
now. I'm going to make him a panelist now.
Okay.
Okay, he can.
Okay, my sincere apologies for the break.
Good
Apologies.
to have you
for-
back.
Yeah, thank you. So may I go on, please? Apologies for that break in transmission. So we were discussing at that point where we look at, I am the one with the global picture of what my entire revenue is, what my entire income for that time is, for that time frame is, and it is up to me to ensure that I make adequate provision. I can see the total figure. So it's from that total figure that my tax band will kick in.
Perhaps you switch off your video.
So
You can switch off your video.
the things that come in, all the income that come in from different streams, I am the one responsible for putting it together and declaring it. So ultimately, the tax liability for both correctness and adequacy is on me. So I think it's important that we note that for both instances. Thank you very much. I hope I answered your question satisfactorily.
Yeah, thank you very much, Mr. Adebusi. We are sincerely very grateful. You have done a lot of clarification for us today. And basically, we now know that we are all beneficiary of this new tax regime. And so depending on how we look at it, and especially for those of us in academia, importantly, we need to sit tight and keep our records, especially so that before we get to when we are going to be retiring, we don't have to start paying millions back. And for those of us in the public space, different employers of labor, individuals, school owners, SMEs owners, we all have a role to play, keeping record, and keeping record. Thank you very much, Mr. Aleke Adebusi. We really appreciate, and want to appreciate the Central Office of Research here in Obafemi Awolowo University for this intellectual conversation. And I know that when next we call you all to come and listen to another important conversation or issues in Nigeria, we would all be here to listen. We want to say thank you, and thank you. Do have a lovely day.
Thank you for having me. Bye, everyone.
Mr. Aleke, sorry, do you have a last word for us before you go?
Oh, okay. Again, I will reiterate
thank you.
That the words of yeah, all right. Can you hear me?
Yes.
Hello?
Yes, we can hear
all
you.
right, thank you. So for all right, as final words, I will reiterate the words of Kola Wale Adebayo. Following the law does not require perfection, just honesty and organization. Thank you very much.
Thank you.
Thank you very much. We appreciate you.
All right.